Hi students, hope you are well, safe and sound at your home, preparing well. So doing this video to have a quick revision of company accounts, right? Which can be confusing at times and would like to cover maximum possible. In the meanwhile, you can, put out your doubt, share this with your friends. Whenever you have a doubt, just put it out in the chat box. And during the end of the session, we will, consider those doubts. Okay, so good to go. I will not be, taking specifics on companies' financial statements because that is more a format-oriented thing, and you all should already be well versed with that. If you have any doubt in that, definitely we'll cover it. Now, as we move forward, I would like to start with managerial remuneration. We will spend some time in understanding key aspects, understanding the limits, and then move to dividend and so on. Right? Routine format related things I'll not be covering. You guys can revise back at home, and if you have any doubt, definitely we'll address that. So coming to managerial remuneration. First thing, all of you, that you should remember the overall limit of managerial remuneration, which is 11%. So, irrespective of the number of directors we have, irrespective of number of full-time, part-time, executive, non-executive, whatever it is, overall managerial remuneration is 11% of the net profits. And please remember, when we compute this net profit, we do not consider managerial remuneration. So we will not be deducting managerial remuneration when we talk about. Just a second, I'll just respond to it. So whenever we talk about total managerial remuneration payable, it will be limited to 11%. The overall limit is capped at 11%, and this is for a public company. Now, we are talking about managers and we are also talking about part-time directors, right? So these are the sets we are considering. Overall limit will be 11%. Now, after understanding this overall limit, let's move one step further. The next level, which is for managing director, manager, and whole-time directors, there is a separate limit. For others, there is a separate limit. So, to managing director, whole-time director, and the manager, if there is one, so let's say there is one managing director, or let's say there is one whole-time director, or one manager, for one person, the limit is kept at 5%. If there are more than one, let's say there is one managing director, there are two whole-time directors, then the limit is kept at 10%. So please remember, overall limit is 11% of net profits, and limit for one personnel, that is one managing director or whole-time director or manager, is 5%. For more than one, if you have 2 or 3 or 4 or 5, it is kept at 10%. So this is one category. The other category is who is not a full-time director, who are non-executive directors. To them, again, there are two categories here. If the company already has a managing director or a whole-time director or a manager, then the limit is 1%. Is voice not clear? Like Sai Kiran pointing out the voice is not clear. Just let me check. Hello. Okay, it's clear. Sorry for the mild disturbance. Okay, so coming back where I was, if it is a manager, managing director, and whole-time director, then it is 5% for one, 10% for more than one. For others who are not whole-time directors, there the limit is 1% if there is already a manager, and 3% if there is no manager or whole-time director. This distinction you have to make it very clear here. Okay. Now there is also a concept of sitting fees which are paid to non-executive directors. That sitting fees is kept separate. It is kept outside this overall computation of managerial remuneration. That sitting fees will be decided by the board of directors based on whatever is prescribed in the Companies Act and Articles of Association. Based on that, they will be paying the sitting fees. This is about the limits. Now, when we talk about computation of profits for managerial remuneration, from examination point of view, few things that you need to keep in mind. Number one, managerial remuneration will not be deducted. So even if they gave it to you in the profit and loss account in the examination, you will not deduct this managerial remuneration. Means you will not consider managerial remuneration for computing the overall limit. So for example, profit is, let's say, 100 and it includes managerial remuneration of 10 already. So basically you will remove that and consider profit to be 110. Then another important thing to understand is, if at all there is any notional gain, revaluation gain, all these kind of gains, they are not considered while computing managerial remuneration. Then if there is any profit by sale of immovable property, so to the extent of depreciation which was charged earlier, that is, let's say the cost is 100, the WDV is 20, and the property is sold at 110 or 120. So 100 minus 20, this 80 of depreciation which was claimed earlier, to that extent you can consider the profit. Beyond that, any profit will not be considered. Okay, so these are few specific things, and all other normal working expenses, employees cost, bonus, interest, all these are considered, or all these are deducted when computing managerial remuneration. Then very important, income tax is not deducted. So whenever we talk about managerial remuneration, we will not be deducting income tax, that is from profit before taxation. Okay. Krishna, I will be covering company accounts of CA in the group 1, right? And Surya, if you are wondering if I am really serious, let's change in my style because we can't go out. Okay. Now, coming to the next part, if companies do not have sufficient profits, see, if you have profits, you can pay whatever is the limit. But if the companies do not have sufficient profit, so that we have to refer to Schedule 5, which gives separate limit. Okay, so this is reporting. I'm just quickly checking my internet connection. So I've reconnected, hope it should be fine now. Okay. So yeah, now if at all companies do not have sufficient profits, if they have profits, they can follow the percentages of 11%, 5%, 10%, 1% and 3%. That limit can be used. If they do not have sufficient profit, then we have to go and we have to refer to the effective capital. Now effective capital, if the effective capital is less than 5 crores, is prescribed is per director, or if the sufficient profits are not available, limits prescribed is per director. Whereas earlier case where profits are sufficient, the limit prescribed is overall limit and not per director. So don't get confused in the examination. If at all you come to a case of computing the effective capital, then the limit prescribed is per director. Please make it very clear. And if the effective capital is less than 5 crores, it is 60 lakhs. 5 crores up to 100 crores, 84 lakhs. 100 crores up to 250 crores, 120 lakhs. And 250 crores and beyond, 120 lakhs plus 0.01% of the capital in excess of 250 crores. So basically, this is a table. You can refer to the notes and you can memorize the limits. How I keep it is 60 and 120. These are the two limits which I remember. And 184 is another limit which you have to remember for 5 crores to 100 crores. Now, coming to the next aspect, when we have to coming to the next aspect when we are talking about effective capital. Now, in effective capital, rest all things are simple. Two things you need to keep in mind is to deduct any investment. So if there are any investments from the effective capital, you will remove that. So once you have computed the effective capital, or once you have computed the total of share capital, securities premium account, free reserves, long-term loans, once you have computed the total of all of these, then from these you will deduct investments, preliminary expenses which are not written off, and accumulated losses. So these three items are deducted or eliminated when you are computing the effective capital. Now in examination, where students tend to make mistakes is, if at all there is a revaluation reserve given in the question, so you should not be considering revaluation reserve for effective capital. So keep in mind, revaluation reserve will be excluded. Will securities premium account be included? Yes, securities premium account will be included. Will loans be included? Yes, loans will be included. Debentures? Yes, debentures will be included. Will a short-term working capital loan be included? No. Whenever we are talking about effective capital, we are talking about long-term loans and long-term debentures and long-term deposits, not short-term loans or short-term working capital loans. So please keep in mind, share capital, yes. Securities premium account, yes, you will consider. Revaluation reserve, you will not consider. Short-term loans, you will not consider. Long-term loans, you will consider. And what will you deduct? You will deduct any investment. So capital and other items are coming from your liabilities side. If you have made any investment, then you will not consider that. But if the business of the company itself is investment, then you can include it. Preliminary expenses, if they are not yet enough, generally you will not find these days in the balance sheets. Even that will not be considered. If there are any accumulated losses, that will not be considered. That will be deducted. That will be deducted. So this is the other aspect. And if there are any share application money which have not yet been allotted, share application money pending allotted, you will not consider that while computing effective capital. Okay, so if you have any doubts, or I'll just continue on this aspect further. Then very important to note, what all are excluded from managerial remuneration. See, one thing is to compute what is the overall limit. We said limit is 11% or 5% or 10% or 1% or 3%. That is the limits we have computed. In case of losses or in case of insufficiency of profit, again we have seen the limit. But well, if you are paying some amounts to managerial remuneration allowable under Income Tax Act, that is not included. Gratuity not exceeding half month salary, that is not included. Encashment of leave, that is not included. Children's education allowance, rupees 12,000 per month per child, up to 2 children, that is also not included. And some holiday passage and leave travel concession. If these items are paid to the directors or to the managerial personnel, that is not included. And specifically, please keep in mind, sitting fees do not form part of your overall managerial remuneration. Okay. Now, quickly coming on to the next aspect or next topic, which is on dividends. Dividends are of two types: the final dividend or the annual dividend which is paid, and the interim dividend. Now, when you say final dividend, these dividends are declared in the annual general meeting. They are approved by the shareholders in the annual general meeting. And interim dividend is paid by the board of directors between two annual general meetings, or interim dividends are approved by the board of directors between two annual general meetings. Now, sometimes students get confused that when it is declared in the annual general meeting, why does it come in the financial statement? Do we make a provision for that? What is the impact of changes in accounting standard 4 on this? So Mohammed, can you elaborate your question practically? Like notes you can download from our app, which is OneFin, or entire notes is available there in summarized form, in a crisp form. I wanted to share the screen, but there is some issue with my software, so I could not share my screen. Next time when I do, I'll definitely try to share screen and teach that, or to deliver the lecture. Queries I'll take it at the end. Okay, so notes you can simply go ahead and download from our app, which is OneFin. The link is available in the description box. Now coming back, interim dividend are paid between two annual general meeting, and they are approved. They are declared by the board of directors. Now, for example, let's say financial year is ending on 31st of March. Oh, thanks, Gautam. So where I was, yeah. So coming back, if financial year is ending on 31st March of 2020 and AGM is happening, let's say in July or August of 2020, hopefully things settle down and the company is conducting an AGM. In that AGM, whatever dividends are declared, earlier the rule was, or earlier the provision was, those dividends were provided in the financial statements ending on 31st March of 2020. So that provision was made. But now the provision is not made. It can be disclosed, but the provision is not made. The impact in accounting for final dividend is made only when they are declared and approved in the annual general meeting. Before that, you will not make any provision. Earlier under AS4, you were required to make considering it to be a event occurring after the balance sheet date. But today, as per recent Schedule 3 and recent provisions, such dividend which are declared at the AGM need not be provided for. So, a company which declares dividend, and let's say if it is not paid, if it is not claimed, then it will come in the financial statements. The impact will be given in the financial statements of next year, in the financial year in which AGM was held. So this is one thing you have to keep in mind. And a lot of students make mistakes while computing the dividend. Please note, dividends are to be computed on the face value, and if there is any call in arrear, that may not be eligible for dividend. So these two things you need to keep in mind, but it is always on the face value. Irrespective of the issue price or market price, it will be done on the face value. Though it's a small point, but I'm telling you out of experience, these simple mistakes can cost you marks in the examination. Okay. Then, what are the sources of payment of dividend? Now, when I say sources of payment of dividends, what are the balances which I can use? Now, please note, whenever we pay dividend, we are giving out a portion of our profit to the shareholders, right? Whatever the company has earned during the period or in the past periods, out of those profits, they are taking some amount out and they are paying it to the shareholders. That is what is a dividend. Share forfeiture, it will not be eligible for dividend. One of the question that was asked. So when he has earned money or earned profits in the current year, they can declare dividends out of the current year profit. Can I use past year accumulated profits? Yes, the company can also go back and use past year's accumulated profits to pay dividend. Can I use the amount lying in some general reserve? Yes, we can use the amounts lying in general reserve also to pay dividends. But please note, whenever we are withdrawing certain amounts from the reserves, then some conditions as per the company's dividend declaration rules have to be followed. If it is purely out of profits, if it's purely out of my current year profit, then there is no restriction, you can pay. If it is out of past year profits, we can still pay. But if you're drawing money from reserves to pay dividend, then you have to fulfill certain conditions. And the other thing that you need to keep in mind is, though it may sound to be something illogical or understood by default, depreciation must be provided for, and previous periods depreciation, unabsorbed losses, all those things must be taken care of before you pay dividend. So that is very important. If I am paying any dividend and if there is some losses in the past, that losses I have to set off first and then I can pay the dividend. If I don't adjust the previous year losses and I simply pay out dividend from the current period, it is not a wise decision from the part of the company as well. Now, I can pay out of current year profits, I can pay out of accumulated profits, I can pay out of both one of these two things, and I can withdraw money from the reserves and still pay. Sometimes the government also provides certain monies for which which can be used to pay dividend, but these are very rare circumstances. So always remember, depreciation to the extent specified in Schedule 2 must be provided for. So if you are paying dividend, depreciation must be fully provided. Now, if you are drawing money out of the reserves and paying the dividend, then there are certain conditions. What are those conditions? The rate of dividend should not exceed the average of the rates in which the dividend was declared in the 3 years prior to that. So if I'm talking about 2019 and 20, I have to go back 3 years and check what is the dividend paid, how much of dividend we have paid, and average of that rate is the maximum I can pay. That is one. Then the amount of profits which I am withdrawing or which I am removing from the accumulated profits should not be more than 1/10 of the paid up capital and free reserves. Now, what does this mean? I am withdrawing some money from my past reserves. The amount that I am allowed to withdraw is 1/10 of the paid up capital, that is 1, plus free reserves. Now, what are these free reserves? Free reserves are those reserves which are available to be used for payment of dividend. Free reserves could be general reserve. Now, is debenture redemption reserve a free reserve? No, it is not a free reserve because I cannot use DRR to pay dividend. Is capital redemption reserve a free reserve? No, it is not a free reserve. I cannot pay dividend out of capital redemption reserve. Is securities premium account a free reserve? It is not a free reserve. So I cannot use even securities premium account to pay dividends. So paid up capital plus free reserves, whatever is the total, out of that 1/10 is the maximum amount which can be withdrawn. That is the first condition. Then after the amount has been withdrawn, first we have to set off the losses which are existing. So those losses will be set off, and another condition we need to check is the balance in the reserves after withdrawal should not fall below 15% of its paid up share capital as per the last financial year or as per the latest financial statement. Now what does this mean? Let's say there is 100, there is 100 rupees lying in my reserves. I withdrew 50% of that. Okay, I withdrew 50% of that, and 50 is what I've withdrawn by complying with whatever conditions. Now this balance of 50 should not be less than 15% of my paid up capital. So I have to see what is my paid up capital. Let's say my paid up capital is 1000. What is 15% of 1000? 150. So below one, my reserve balance should not be less than 150. It should not be less than 15% of the paid up share capital. Now to quickly again recap, first condition, 3 years average rate. That is what you have to consider. Second condition, I can withdraw 1/10 of my paid up capital and free reserves. So that is the second condition. Third condition, after withdrawing the amount, the balance should not be less than 15% of the paid up. These conditions have to be satisfied. Only then I can use amount from reserves to pay dividend. And one other thing, you cannot declare dividend unless previous periods carried forward losses and depreciation are not set off. So whatever amount you withdraw, first you have to set it off against the previous, whatever is the amount which you have withdrawn, you have to use it to set off the losses and the depreciation, and then you can make the dividend payment. Okay. So these are some conditions which are required to be fulfilled if you have to pay dividends. See, I am doing a summary kind of revision, so it's not in detail, or we're not discussing too much of logic here. The logic were discussed in the class fully. So once you fulfill these conditions, you can use past year's profit, past year's reserves to pay the dividends, right? Now another important thing which comes to mind is dividend distribution tax. Now this is the thing only for the current period, or in the current financial year it will be applicable. From the next financial year anyways they have removed the dividend distribution tax, so it will not be relevant, but still for our examination purpose we have to consider dividend distribution tax. Now what is the rate of dividend distribution tax and how do we compute that? Now if you know the dividend distribution tax, though they make it, or though they say it at 15%, it has to be grossed up. There is a concept of grossing up. So for example, if the company pays 100 as dividend, it is not that the dividend distribution tax is applicable on 100. They have to actually gross it up. Gross it up meaning, assume the dividend is 100. If the dividend is 100, net what is paid to the shareholders, this has to be after deducting 15% as dividend distribution tax. So effectively, if the company thinks to pay 100, I'm just giving you the reverse example. If the company is thinking of paying 100 as dividend, then 15% has to be deducted, and only 85 should be paid to the shareholders. That is the reverse way of looking at the grossing up provisions. Are we clear on this? So once again repeating, if the company wants to set aside 100, then what the shareholders will get is only 85. So actually, if you see the dividend distribution in the hand of the shareholder, it will be 15 divided by 85. That is around 17.64% plus applicable surcharge and cess. So it will be 17.64 into surcharge is 1.12 multiplied by 1.04 the cess. It comes around 20.54%. Now there are different ways to compute this. Sometimes what the companies can do is they can take a grossing up rate, or they can take the 15% plus surcharge plus cess, and then work it backwards. That is also possible. The other way which we can do, which we have also followed in the class, is assume 100 is the total amount. Out of that, 15 has to be set aside for dividend. 85 is what is the net dividend. So 15% has to be computed in that way, on the grossed up amount. So 15 is not on the amount which is paid to the shareholders. Now, for example, for 1000 of face value of shares, I'm just giving an example. For 1000 of face value of shares, if the dividend the company wants to pay is 10%, so 10% of 1000 makes it 100. 100 is what the shareholder should finally get, right? Now, on this, how do we compute the DDT? DDT is not 15% on 100. 100 is what the shareholder is getting, which is comparable to 85. So that way you have to do a reverse working and arrive at the dividend distribution tax percentage. Or the other way, what I just now explain it to you. If you do, let's say you have to pay 15 out of 85 is what is the effective thing, multiplied by 1.12 multiplied by 1.04. So you'll get to the answer of 20.5%. So that is what is the effective rate of dividend. Okay, so you can remember that number, or you can remember the logic for applying it in the examination. Now, in question, if they have given that, okay, dividend distribution tax or dividend has been declared so much, you have two choices. If they mention including dividend distribution tax, then your work is simple. You don't have to worry about anything. If they do not mention anything about dividend distribution tax, then you have to also provide for dividend distribution tax. A lot of students, the mistake that they do is they treat it as a part of current taxes. That is wrong. You cannot, the dividend distribution tax is not an expenditure which has to be debited to the profit and loss account. Dividend distribution tax is application of profits. So dividend and dividend distribution tax should be shown as deduction from the reserves balance. It is not to be shown as an expenditure in the profit and loss account. Please keep that in mind. A lot of students make this mistake and they end up losing easy marks. So okay, I'll just take few questions. I think there are a lot of questions here. Someone asked, can I start articleship without completion of orientation and ITT? Yes, you can start, though off the topic I'm answering this to you. You can start articleship by 30th April. You are allowed to start, and then I think they have given a date of 31st August by which you have to complete the orientation and ITT. Hopefully things open by then and you are able to do it. Your final examination attempt will not be impacted. So that is what they have clarified. Then, yeah, so correction window, I hope Institute takes a call and they open the correction window, because it's important for the students also now because of the lockdown and students not being able to come back to the cities, or they're stuck up at their hometowns and they would not want to actually move out to other places and write exams. I hope Institute takes this into consideration and they actually give another option to correct the things. Then corporate dividend tax rate we have already discussed. Then okay, if I watch classes it shows incomplete, you have to mark it as complete, Mohan, so it gets completed automatically. Law we are updating. We are also hit badly by the lockdown. A lot of our staff works on desktop computers. We had to think of ways to move desktop computers to multiple places and ensure that they're working properly. And they are working, and we all are working from home to ensure that the content is updated. A company's law is updated completely. Will be completed in next 2 days. Then maybe in the next 5 to 7 days we'll have Contract Act completed, and then followed by Negotiable Instruments Act. Then offline classes, we don't have any offline classes. We only have online classes, right? These are some of the questions which I thought I'll address before I move further. So the next topic we'll start with is the cash flow statement. One of the most scoring topic in companies' accounts. You cannot make mistakes here. And sometimes the questions are so simple that you'll score 8 out of 8 or 10 out of 10 marks. And here, And here, if you you will lose marks, and I've seen students losing marks only by making silly mistakes. Sometimes the question are as simple as, Mohammed, what I'll do is for dividend distribution tax, I'll actually do a video with screen recording and I'll upload that on YouTube. That will help you, understand easier, because when I'm talking orally, the numbers may not be, clear. So what I'll actually do is after this video is done, maybe by evening or tomorrow, we will update. I'll update one video with pure screen recording, which will show you how dividend distribution tax is computed. Okay, so that will be put on the YouTube channel shortly. Yeah, so coming to the next topic, cash flow statements. As I was saying, some questions are so straightforward, like classify the activities as operating, financing, and investing activities. And I'll tell you one thing, I've seen students making blunders in these kind of classifications, where you can score 4 out of 4 or 5 out of 5 or 8 out of 8 marks. You cannot make mistakes. Now, simple logic or simple rule to understand what is operating, what is investing, and what is financing. First, let's talk about operating. Whenever you see, or whenever you look at items, just look at it as, is this item my core business? Is this item my business on a day-to-day basis? So on a day-to-day basis, if that is my business, for example, a company purchases and sells car. Now, selling car is a day-to-day business. Purchasing of car is a day-to-day business for that company. Such activities will surely go into operating activities. Whereas if there is another company whose business is trading in, let's say, groceries, and that company purchases car, now for that company, it is a fixed asset. So you have to look at it. You have to look at it in a way as if you are looking at the profit and loss account, one part, then balance sheet, the other part. Now, when it is a profit and loss account, items related to sale, revenue from operations, day-to-day expenses, cost of goods sold, general salaries, all of these items, which are the day-to-day operating part of the business, are activities or operating activities. Okay, so operating activities means, like, I am into purchase and selling of cars. So if I purchase car, it becomes an operating activity. When I sell those cars, they become my operating activity. Now, even for this car dealer, if they purchase car to be used for official purpose, not for selling, for official purpose, then it will not be an operating activity. So you have to keep this in mind. Items which will fall in operating activities are largely sale of inventories, expenses related to those inventories, general administrative expenses, selling related expenses, income tax related to these activities. All these are operating activities. Now, coming to investment, in the investment category, only two items can be appeared, or broadly two items can appear. That is, one, property, plant, and equipment, that is tangible and intangible assets. Any activity related to tangible and intangible assets will be considered as investment activities. That is one. Second, the investments as such, as under accounting standard 13, whichever item is used for investing, like you invest in shares of other companies, you invest in debentures of other companies, these activities. So you look at it from a balance sheet perspective. Fixed assets, or that is property, plant, and equipment, tangible and intangible, and investments. These will be your investment activities. That is one. Now, we have invested in shares of another company and we got dividend. Now, because the primary activity is investment activity, the dividend that we earn will also be an inflow from investment activity. Then coming to financing activity. Now, financing activity means come on the liability sides and anything to do with equities, preference stock, loans. These three aspects, these will be your financing activities. Now, sir, what about working capital? What about my current liabilities and current assets? See, current liabilities are generally incurred for what? For trading purpose, for purchases, for creditors. Now, creditors, if you see, the purchases related part, we classified under operating activities. So, any movement in creditors, any movement in debtors, any movement in inventories, all of these again form part of your operating activities. So if I have to break this down for you, anything to do with P&L, your normal day-to-day operations and related activities, except the financing part, all of those form part of operating activity. Related to those, the inventory, the debtors, the creditors, advances to employees, all these form part of operating activities. Coming to financing, your equity, reference stock, loan, and related items like dividend paid, interest paid, all of these come under financing activity. Investment, property, plant and equipment, intangible assets, and other investments. See, once you classify all the activities into these three broad categories, then it becomes easier to sort it in the examination. So that is one part of it. Another part of it you must remember is non-cash expenses. Depreciation is a non-cash expense. Provision, any provision you make is a non-cash expense. So if at all there is any non-cash expenditure, you will have to adjust. Now this is about classification. Coming to preparation. Preparation of cash flow statements. One method is direct method. The other method is indirect method. Direct method is simple. In the direct method, operating activities, you will capture all the receipts, all the payments, you will get operating activities, then you will deduct income tax, you will get net cash flow from operating activities. Coming to financing and investing, again, line by line, what is the receipt or what is the inflow and what is the outflow. Once you summarize this, you will get the cash flow statement. Now, kind of mistakes what students make. I'll just give you some mistakes what students make and they lose marks. If at all there is a negative item, outflow, they'll forget to put brackets or they'll forget to subtract it and they will in fact add it. They'll make a mistake there. And sometimes what happens is fixed asset when they are sold, there are two elements. One is profit from sale of fixed asset, that is one part. Second is total amount collected on sale of fixed asset. Now for cash flow purposes, profit is not relevant. For cash flow purposes, only the total amount of sale is relevant. For example, asset worth 100, fixed asset worth 100, we sold, gain of 20 is not relevant for cash flow. What is relevant is we sold it for 120. So my cash inflow should be 120. So don't make these kind of mistakes when you prepare cash flow statements. And a lot of students get confused when they are preparing working notes, especially when it comes to sale of fixed assets, sale of redemption of debentures, provision for bad debts, provision for taxation. A lot of students get confused there. The best way I tell you to arrive at the amount of cash flow. For example, fixed asset. Simply prepare a fixed asset account, ledger account. Don't worry about preparation of statements. I have seen students trying to by heart statements like I will add this, I will deduct this. If you do that, you will never be able to master accounting. The best way to prepare working notes for cash flow is, for example, there is a fixed asset related adjustment. Simply prepare a ledger account. Now in that ledger account, how will you start? You know the opening balance, so put to balance brought down. You know the closing balance, we can put the closing balance. If there are any additions, you will debit to this account. Depreciation, you can credit to this account. And whatever is the balancing figure, either you would have sold off or you would have purchased afresh. So that balancing figure can be arrived at by preparing a T-shaped ledger account better than preparing a statement. Same thing with provision for taxation. Simply prepare a ledger account. You will be able to figure out what is the amount of taxation paid. Sometimes bad debts related adjustment. Simply prepare accounts like your debtors account and bad debts account, or debtors account and provision for bad debts account. Once you prepare ledger statements, it will be easy for you to understand and relate to the items that you are learning. And that is what we have followed in our classes as well. The thing what I do not want you to do is to try to by heart. Okay, if it is this depreciation, then we'll deduct, and if this is a sale, then we'll add, then we'll deduct. If you start getting into learning things by heart, by the time you learn 7 adjustments, you'll forget what you have learned in the first adjustment. So for all the items, fixed assets, debtors, your provision for taxation, simply prepare a ledger account applying your double entries system. What is to be debited, what is to be credited, you can actually do that, and then you can prepare the arrive at the numbers and bring it to the cash flow statement. Income tax paid should be shown separately. Any interest which is received on investment will be a financing activity. I'm re-emphasizing these points because these are where students make mistakes. So, and then after you've arrived at all 3 cash flows, you will simply add, we'll figure out what is opening balance, what is the increase or decrease, and what is the closing balance. Now coming to indirect way of preparation of cash flow statement, here people get scared, students get scared that how should we approach, but the logic is again pretty simple. You will always have to begin with net profit before taxes. That should be a starting point. Please keep this point in mind. Net profit before taxes. Now, after you have arrived at, or after you have started with net profit before taxes, the next thing you should be doing is adjust for all non-cash related expenses or non-cash expenses. For example, depreciation. Will depreciation impact my cash flow? No. So I will add that back. Provision for bad debt, I will add that back. Any other impairment losses, any other revaluation gain, whatever is not a cash item, I will adjust that. Then, because we are preparing operating activities, any item pertaining to financing or investing activity, for example, there is a profit on sale of fixed asset. Now, is profit on sale of fixed asset related to operating activity? It is not. So what would you do? You would put it as investing activity. Now, when you have to move it to investing activity, the profit element which is coming or which is appearing in the profit and loss account is not relevant. So you will adjust that. So let's say 100 is my total profit, in which 20 of fixed asset sale is already included. So what will I do? I will remove that 20. So I will deduct that profit. Similarly, if there is a loss, I will add back that loss so that I get to the number without fixed asset related adjustments. Now, where will I take this fixed asset? I will take this to the investment activity, where I will not talk about the profit or loss. I will talk about how much money was collected by selling those fixed assets. Okay. So that is another thing you have to be careful. Adjust these items. Now, after you adjust all these items, you get something called as cash flow before changes in working capital, or net profit before. Now, after this, I'm not talking about logic. Why do we do working capital changes? Because this we have already discussed at length. Then you bucket your working capital into two parts: asset and liability. Assets and liabilities. Now, for ease of understanding, pick one asset. For ease of understanding, pick one asset, let's say debtors. If debtors balance has increased, means we collected less from the debtors, correct? So you can use that logic. If debtors balance has increased, means we collected less from the debtors, means there is no cash inflow, rather it looks like a deemed cash outflow. Because we collected less, we deduct it or we reduce it. Pick one asset and understand the logic. It will be easy for you to remember other things. Now, detailed logic of this we have already covered in the class, so I'm not repeating it again. I'm just teaching you how to remember these for the examination. Just pick debtor. If debtor is increased, means I collected less from the debtors. That means I have to reduce. Now, if increase in debtors has to be reduced, increase in inventory also has to be reduced. Increase in any other current assets has to be reduced. If there is a decrease, then I have to add back. Right? So once you start with one point, it will be easy for you to remember. Now, after you're done with asset, come to liability. If increase in debtor is reduced, increase in creditor should be done opposite, or there should be an opposite treatment or a reverse treatment. So if increase in debtors means reduction or deduction, increase in creditors means plus or increase, right? You are actually increasing. Increase in any other liability, you will show it as a plus item, or you will show it as a deemed inflow. Right? So once this is done, working capital adjustments are done, you will arrive at net cash flow from operating activities before taxes. From this, you will deduct actual taxes paid, and you will arrive at cash flow from operating activities after taxes. As far as investment activities and your financing activities are concerned, there is no difference between direct method and indirect method. So the difference in indirect method is only for operating activities, right? So prepare the format neatly, prepare the working notes, and I'll tell you, this is one topic where you cannot lose marks. If you get a question, you should be in a position to score 8 out of 8 or 10 out of 10, and it will add a lot to your overall aggregate marks, right? So that is about cash flow broadly. So two kinds of question can come. One is classifying, and the second one is preparing a cash flow statement. So some more questions here. CDS. So CDS would be closed. See, because of the lockdown, CDS would be closed. So you'll not be getting any email or anything regarding that. Or even if you get an email, you will not be receiving material for at least next 1 month. So students who are preparing for November exams, who have not received their books, please download it and then start preparing with the soft copies. Okay. Managerial remuneration steps, I think we have already discussed. If you have any specific doubt, you can put it out at our forum of OneFin. We'll address it there. Dividend on partly paid shares can be made provided articles of association allow it. So that has to be specific. It has to be allowed under the articles of association. Then what is the point of issuing shares if giving? So I don't know, Divya, I didn't understand this question of yours. So please, if you can repeat it. Okay, so then there is some question on completion of IT assessment of last year completed with difference. Now, if there was a last year IT assessment and it has been completed in the current year, see, last year we would have made provision. Whatever is the extra amount that has to be paid, that will be treated as current period expenses. It will not be treated as a prior period item because provision for taxation is a estimate. It is an estimate. It is not an error or omission. So last year I made 100 of provision. Actually, I was asked to pay 110. That extra 10 rupees will be my current period's tax. Why securities transaction tax and dividend distribution tax comes in company's account? Because as per the Finance Act, you are supposed to pay securities transaction tax whenever you purchase or sell shares on stock exchanges. Okay, so on recognized stock exchanges, whenever you are selling listed shares or mutual funds, also when you are buying or selling, you have to pay something called as securities transaction tax. That is why it comes, and it is a part of your cost. Securities transaction tax becomes tax and income tax act for till this year, that is till 31st of March of 2020 financial year, you have to pay dividend distribution tax. The companies have to pay, and the corresponding income in the hands of shareholders to some extent will be exempted because of that. How to approach preparation of financial statement question. Now, this is one thing where again you should not be losing marks. First, you should remember the format very clearly. What comes on the liability side, what comes on the asset side, what comes under non-current assets, what is the property, plant and equipment, tangible, intangible, investment, current assets, everything you have to remember. I'm saying remember, it is to be remembered. And in the class I have covered it in a way in which you can relate this with the manufacturing, trading and profit and loss account, so and balance sheet. The structure is same. The structure is same. You just need to understand the format. Now, students, the mistakes what students make. If there is no item relating to some specific part, let us say there are no non-current investments, okay, or there are no long-term investment, that line item is not required. If there are no other current assets, that line item is not required. Don't just prepare the entire format thinking that you will get marks. You will get marks only for those items which are given in the question. That is one. Now, how do we approach preparation of financial statements? See, generally you will be given a trial balance. Always make it a rule, or always understand that whatever is given in the trial balance has already gone through a double entry effect, right? So if there is a debtor, there is the sales corresponding to that has already been captured. So take item by item and start putting it in the respective places in the balance sheet and profit and loss account. So what I suggest to the students is leave a page for balance sheet, leave a page for P&L, then have at least 2 pages for notes to accounts. Okay, so for example, share capital related information, you put it in the balance sheet. Immediately prepare a notes to account for that, because if you do not prepare notes to account, you will not be getting marks for that. Please keep this in mind. I'll tell you, balance sheet preparation, the items which appear in the balance sheet and profit and loss account, generally for 3 to 4 items you will get 1 mark. For notes to account, for every item you may get half mark to 1 mark. So if you don't prepare notes to accounts, you are easily losing out 4 to 5 marks. So every item in the trial balance, you have to identify where does this item go and sit into, where does this item fit into. Sales, revenue from operations, interest income, other income, employee related cost, employee cost, finance related cost, finance cost, depreciation separately, other expenses, club them separately. Then when it comes to preparation of balance sheet and the notes, you will have to do the same logic. Which all item fall in which all category, you just classify and put them out there. Then adjustments always appear twice because adjustments have not gone through the double entry system. Now adjustments mean what? Let's say you have to provide, or you have to write off bad debts. You have to write off bad debts, and that has been given as an adjustment. So if at all you go and see, or if at all there is an item that bad dates to be written off, let's say 5,000. Now double entry effect means what? Bad debt expenditure debit, credit the data. So bad debt expenditure will go to P&L. From data's balance, you will remove another 5,000. So all the adjustments will be done or will have two impacts: one in the P&L, one in the balance sheet. Sometimes both of them can be in the balance sheet. Sometimes both of them can also be in the P&L, but they will always have two impacts or two-sided impacts. After you put the information properly, I don't think tallying the balance sheet or worrying about the balance sheet matching should be a problem. Apply the basic fundamental principles, remember the format, and then put it out there. Okay. Then, okay, so coming back, provision for tax we already discussed. Okay, so that 50,000 and 51,000 for the current date, at 1,000 will be a part of a current tax. Then another query is goods were sold on sales or return basis for 6,000, costing 4,000, and 50% of these goods were approved. Remaining goods were with them as on 31st March. How to make adjustment in Schedule 3? Now, if you have sold it on sales or return basis and you have sold for 6,000, 50% is approved, 50% is not approved. So from sales, you'll have to reduce that 50% which is not approved. That is first adjustment. Second adjustment would be to bring that to your inventory. Inventory will be done, or inventory will be then valued at cost. Okay, so two adjustments we have to do. 3,000 you will remove from the sales, and you will have to correspondingly remove it from the debtors also. And 2,000 of inventory will be added to the closing stock. Okay. Fast track notes, yes, we'll start working on it, and we already have. Also will be soon be not soon, we'll start working. I can't tell a specific date, but yes, definitely we are working on fast track notes also, so that students are able to revise it just before the examination. Okay, now please share the link. Okay, we'll put, I think the link should be available in the description, or I'll just ensure that it is put out. You can search for our app, which is OneFin by Indigo Learn on Play Store or App Store, and you can download the notes from that. Okay. How do we understand how many ledgers accounts to prepare? Now, for working notes specifically, something which is not given in the question directly should form a part of working note. Very simple. The working note can be inside the statement, like inside the ledger account, or it can be a separate line item below that. Anything which cannot be directly arrived from the question, it has to be in form of working note. For example, if they told, or if they have provided that purchase of fixed assets during the year is 10,000. So it is an information given directly to you. You do not need to prepare any working note for that. But they have given you information like opening balance of machinery is so much, closing balance is so much, this much, this is the depreciation. They sold off some assets at some profit. So in such cases, you have to prepare a working note to ensure that there is no missing information. Okay. So for fixed asset, you may need to prepare one. For investment, if any information is missing, you may need to prepare one. Then for debtors, you may need to prepare one if at all any information is missing. Okay, so any missing information which is not given in the question, for that you need to prepare a notes to working note to ensure that you do not miss out on any item. Okay, sometimes if the information is given directly to you, then you need not worry about those items. In TB, okay, if gross profit is given, now generally gross profit would not be given. If at all gross profit is given, you just start with gross profit. That's what you can do. Okay, just put gross profit and start with that. For company law, I am not an expert in telling you how to write company law answers, but still the basic framework what can be used for answering company law questions is you break your answers into 3 or 4 sections. The first one should talk about the provision. Second section should talk about the facts of the case. Third section, you should analyze and apply the case law to the particular case. And then fourth section, you should have, you should conclude it. You should, address the requirement of the question, and you should conclude your answer. We will most likely also have one, session on how to write examination for law separately. That can happen. Then topics are moved to advanced account. So weight of group 1. What I'll do is I'll you can download the latest section wise weightage from the institute website. You can do that. For redemption of debentures, a lot of things have been actually removed, and what we are left out is only basic application of DRR and DRR investment account. Like sinking fund and other methods have been removed. So you can refer to the latest study material and just focus on what is there. Don't focus on what is removed. So that is there as per the old material. Go to the institute website, download the latest material, and you'll be able to figure out what are the exclusions. Okay, if in cash flow net profit is not given, what should we do? Now, sometimes what the institute does it smartly, or in most of the cases, they'll give you a balance sheet which will have last year profit balance, current year profit balance. Current year net profit will not be given to you. Now we have to derive that. Now, how do we derive that? See, again, profit and loss account, you can prepare a T-shaped format. Take the opening balance, take the closing balance. If at all some dividends have been paid, if at all some amount have been transferred to general reserve, pass all those necessary entries in the same ledger account. The balancing figure will be profit earned during the period. Okay. If net profit is given directly in the adjustment, then there is no problem. You can start with the net profit. For income tax, the questions which are not solved in the class, we will be providing maybe in about a month's time the solution so that all of you can refer to it. 10% equity dividend that will come as a part of board of directors report. Okay, and how to prepare for accounting standards, we have a separate video on that. You can actually go through that. You can search on our YouTube channel how to answer accounting standards question. Preparation part, let me tell you, whatever we have covered in the, if you are able to do it perfectly well, and if you are able to practice last 2 to 3 years, examination questions and RTP, you will be well prepared for your examination. One thing what I'd like to share here is, don't get into the habit of learning things by heart. That is one thing which we have been consciously trying to tell our students also, because if you start learning things by heart, if at all something new comes, you'll be missing out. So anything you do, you figure out why are you doing that adjustment, why are you passing that entry, why are you making that adjustment, and then with that it will be easy for you to handle any kind of question. And so, okay, another thing that you need to keep in mind is, while writing examinations or while answering questions in the examination, even if you are able to do about 90 marks decently, it is a good enough attempt. Okay, so just to give you my example, in my CA finals, I could attempt, I think, about 740 marks out of 800. So in every paper, not because of lack of time, sometimes I did not know the answers, I forgot some things, right? Despite all of this, I could attempt only 760, but with that 760, I was confident that yes, I have done it pretty well. I have written it pretty well, and then that helped me score good marks. So it's not about 100 out of 100 I'll attempt perfectly and come. That's a very aggressive target given the amount of syllabus, given the amount of content we have. So try to focus, or try to prepare. I'm not saying leave out topics, but even if you're able to do 90-95 marks well in the examination or decently in the examination, that's a very good attempt. Okay, that is one. Solving past examination questions is very important. It will help you a lot. To give you an example, or to give you a perspective, during our time in 2009, we used to have a compilation which used to have questions from 1981 till 2004.
It's 17 hours.
Costing. Okay, so I actually solved that because during those times we were not lucky enough to have good books in the market or good notes in the market. So only option was go back to the past exam questions and solve them. This actually helps. Okay, so after you have read the subject for once and you have revised it once, your focus should be, let us practice, past exam papers and RTP papers, because that will actually give you a confidence. That will actually give you a confidence. And we are also planning to have one set of, question papers or one exam, mostly in, mid of April or so. We'll announce the dates. You can sit at home, you can write the papers and you can send them back to us. I'll personally go through those papers and we'll give you, important feedback, where all you are making mistakes, what all you can learn, how do you improve your answer presentation. That will be given, and we are working towards that. Somewhere around mid-April or so, we will start subject by subject. So Surya, in fact, I answered the question before you asked. So we are actually conducting, as I told you, we'll be conducting full 100 marks paper. We'll be giving the questions out to you. You have to sit at home in examination condition. You have to sit at home and write those papers and submit them back to us. Okay, and partnership for IPCC old syllabus. Let us check. Let's figure out because we are also planning for very soon one session on EIS, one of your favorite subjects, I should say, right? So we'll have one live on that as well. We are trying to get as many live sessions possible depending on the faculty schedules and all, right? Oh, so Surya, you want to all students? I think see that may not happen this attempt because we also need to ensure that we have quality and then the resource what we have to implement those. We'll definitely have a call once things settle down, maybe towards mid or end of April, and we will have it there. For SM, I think there is already a free full fast track revision available on YouTube and on our app. So for that, I don't think there is a necessity of live, but still, I might come out and discuss some RTPs and pass an exception. We can handle that, right? Okay, so thanks for being and stay safe, stay at home. Don't watch news too much. Don't spend time on news. Stay away from the news as to the extent possible because the more you consume news about the panic and the epidemic going around, the more you will be affecting. It will be affecting your studies. It's very difficult at this point of time to fully be focused on the preparation. In fact, for us also, it's very difficult. We keep on checking what's happening here, what's happening in play, what's happening in US and all. But for students who are writing examination in June, now 22nd of or 21st, 22nd of June, your focus should be on your examination. There will be a lot of distractions with everyone but still make use of the extra 45 days that institute has given to you. Okay, this 45 days actually the time that is available about 3 months from now, 2 months and some 20 days from now is actually good enough for a full-fledged preparation of one group fully. So make use of this opportunity. Things are happening around. Stay safe, stay at home, take care of your health, take care of your families. Keep talking to your friends. If meeting is not possible, you can have small WhatsApp groups where you can discuss with one another. Okay, so then make small WhatsApp groups, 4 or 5 of you, and you can discuss things. Keep motivating yourself. It's very these are difficult times, and this will pass. Right, this will pass. Let's pray that it passes sooner, and make the best use of the opportunity. Prepare well. All the best for your examination. And if you have any doubt, you can ask at our forums. You can send a mail to support. You can send a message to our WhatsApp number. We will be happy to help you. Right. Hope you enjoyed the session. Thank you.